Quantitative easing, a term that will likely put you to sleep. But this term is going to defy the 21st century and will likely have huge implications on our lives, health, and economy in the coming years. How does QE affect all of this? In today's video, we answer this question with the help of legendary investor Charlie Munger. Quantitative easing has grown to be the most important tool for the United States Federal Reserve and other central banks around the world. Without putting you to sleep, it's essentially the practice of increasing the supply of money by buying government bonds and other securities. It essentially boils down to printing money to prop up the economy. We saw this with the latest stimulus. Nearly everyone in the States got a $1,200 check, businesses got PPP loans, and numerous other handouts were provided and funded not by increasing taxes, but rather by printing the money out. You might be asking yourself, why the hell do we even pay taxes in the first place if the government can simply print themselves out of problems? And it's a fair question considering the events of the last 15 years. We are told over and over again that if central banks increase the money supply too much, it creates inflation. And in the worst case, if the Fed increases inflation and there happens to be no economic growth, we get a situation called stagflation. This has been proven over and over again by various countries, most recently Lebanon, Venezuela, and Iran, where massive inflation causes your money to essentially lose its value almost daily. In the United States and around the world, despite a record amount of unbankable money printing starting way back in the 2007 recession, central banks and various governments have managed to print themselves out of problems while keeping inflation low. Take a look at this chart, which shows the billions the Fed has printed versus the annual inflation rate. As we can see, things look rosy, everyone is happy, and the stock market is booming. Here is Charlie Munger's opinion on the matter.
So, Schuler-Coolin, bachelor's degree 1995, is going to ask about political economy. So, two different questions. What do you think of the combinations of quantitative easing and large fiscal deficit, and where are they going to lead us?
Well, there I've got a very simple answer, and that is, it's one of the most interesting questions anybody could ask. And we're in very uncharted waters. Nobody has gotten by with the kind of money printing we're doing now for a very extended period without some trouble. And I think we're very near the edge of playing with fire.
It is remarkable how much we've expanded the money supply, how low interest rates are, and how little initial response there's been on.
Remarkable is not too strong a word. Astounding would be more like it.
I will let you choose the adjective, Charlie.
It's unbelievably extreme. Some European government borrowed money recently for some tiny little fraction of 1% for 100 years. Now that is weird.
So,
what kind of a lunatic would loan money to a European government for 100 years at less than 1%?
Remember, Charlie is about to be 97 years old. He's Warren Buffett's right-hand man and is undoubtedly one of the smartest investors of all time. As you can see, Charlie's reaction to the question is strong. He almost jolts out of his chair when the professor who is interviewing him uses remarkable as the adjective to describe this recent trend of money printing. Munger is quick to point out that this phenomenon is absurd and unlikely to continue. You must also note that low interest rates are a result of QE, which also has a massive influence on stock prices. The interest rate right now is historically low and has been low for the past 20 years. Interest is gravity in the world of finance. And because of this free money, stock prices, especially those in the tech world, have soared. Take a listen to the next question pertaining to a NASDAQ bubble.
So David Whitner, who is an associate degree in 1975, asked, is the NASDAQ in a bubble and will it blow up? And do we know when? Is the NASDAQ in a bubble?
Well, nobody knows when bubbles are going to blow up. But just because it's NASDAQ doesn't mean it'll have another run like this one very quickly again. This has been unbelievable. Again, there's never been anything quite like it. If you stop to think about it, think what Apple is worth compared to John D. Rockefeller's oil empire. It's been the most dramatic thing that's almost ever happened in the entire world history of finance.
Yes, Mr. Munger, as of the making of this video, Apple is worth $2.17 trillion, while John D. Rockefeller, Standard Oil, a company so big and powerful it had to be split up by the US government, was only worth $1 trillion during its peak adjusted for inflation. Where this is headed next, nobody knows. The next subject Munger gets into is China. While many billionaires and even millionaires are sensitive, criticizing, or even promoting China, Munger is brutally honest in his opinion regarding this massive communist state. He says some things that are quite shocking in this next clip.
The other thing that's really remarkable, the last 30 years of China, they have had real economic growth at a rate for 30 years that no big country has ever had before in the history of the world. And who did that? A bunch of communist Chinese. Now that is really remarkable. So if you're studying finance, you got a lot of strange things to account for.
So Bob Riedenthal, who has a PhD 1979 from aeronautical engineering, asked, so how would you rate investing in China with the current political tensions? Or you invested in China through the ownership of American companies that do business in China?
Well, of course I'm invested partly in American companies that do business in China, including Coca-Cola. But I'm also invested very significantly in China through the management of Li Lu, whom the Munger family backed heavily when he formed a little private equity firm to invest in China. And he has had a very successful record, and that's made me follow very closely the leading companies in China. And of course, I've had very successful experience there.
And does that say that sort of the politics don't matter so much, or?
Yeah, it does. That's a very interesting observation. What that shows is exactly right. Who would have guessed that a bunch of communist Chinese run by one party would have the best economic record that the world has ever seen? Of course it's extreme. And I think it proves that, it doesn't, we Americans would like to think that our free expression and allowing all kinds of opinion and all kinds of criticism of the government is totally essential part of the economy. And what the Chinese have proved is you can have a screamingly successful economy with a fairly controlling government. All the government has to do is create a lot of Smithian capitalism. And if you do that, having a sort of a controlling one-party government doesn't matter. That's not a fashionable thing to say, but I think it's true.
Well, there you go. You heard it here first. Charlie Munger is a communist. I'm of course kidding, but it's very interesting to hear him say that, considering that Charlie Munger is part of the greatest generation and is relatively open about his political beliefs as a huge Republican donor. Although he does consider himself not a normal Republican, advocating for things like single-payer medicine, it's surprising to hear him say that communism, in its right form, does allow for massive economic success, something China has proved to be correct over the last 20 years. We end the interview with his thoughts regarding future stock returns, and just like most of the billionaires that have been featured in this channel of last year, they all state the same thing. Here is his answer.
So my next set of questions are more on the finance side. So Paul Goodson, who has a bachelor's degree in science in 1975, asked, do you expect the next 10 years to have lower returns in the equity markets than the last 10? He doesn't give us an idea why.
The answer is yes.
And could you give us a hint as to why that might come to pass?
Yes, because so many people are in it, and the frenzy is so great, and the systems of management, the reward systems are so foolish that I don't think it's going to work at all. I think the returns will go down, yes. In real terms, the returns will be lower.
Thank you guys for watching. Please make sure you hit that subscribe button if you enjoyed, and don't forget to leave a comment regarding Charlie's thoughts on China.